Good evening. In this video, we will be talking about factoring. So last video, we talked about accounts receivable financing, specifically pledges and assignments. So we know how to account for pledges, and now we also know how to account for assignments. Now we will be learning how to account for factoring agreements. There are two types of factoring depending on its form, so it can be casual or as a continuing agreement. A casual factoring is simply a straight up sales agreement, so the entity does not have a continuing agreement with the factor. Okay, so what is this continuing agreement? So an example would be when before a merchandise is shipped to a customer, the entity requests the factor's credit approval. If approved, the account is sold immediately to the factor after shipment of the goods. A recourse obligation may be stipulated in the contract that states that the factor can go after the entity after the sale is made. So in case the account is not paid. In this case, a loss and a recourse obligation is recognized at its fair value upon factoring and subsequently reversed when the account is eventually collected by the factor. There are cases when the factor may withhold a certain amount as a protection against customer returns and allowances. This is called a factor's holdback, and it is expressed as a percentage of the accounts receivable factored. Let's do a problem. So problem 8-8. The entity company sold accounts receivable without recourse with face amount of 6 million pesos. The factor charged 15% commission on all accounts receivable factored and withheld 10% of the accounts factored as protection against customer returns and other adjustments. The entity had previously established an allowance for doubtful accounts of 200,000 for these accounts. At the end of the year, the entity had collected the factor's holdback, there being no customer returns and other adjustments. So when on the date of factoring, so there's a 15% commission on all accounts receivable factored and a withholding of 10% as holdback. So that's total of 25%. So you're only going to receive 75% of the face value of 6 million. So that's 4.5 million. You have a receivable from factor or the holdback, 10% of 600,000. You have to take into consideration the allowance for doubtful accounts for these accounts receivable of 200,000. So basically you have a loss on factoring of 700,000. So that comprises the 900,000 commission and the 200,000 allowance. At year end, you receive 600,000 of the factor's holdback. So that's it for factoring.